All right, folks, welcome back. Tuesday, August 17th, 2021. It's one of my son's birthdays, so I'm going to keep this brief. We have some celebrating to do. All right, so this is the dollar index daily chart. You can see that we have found support working back down into the lower end of the volume imbalance. Now, yes, it did overshoot a little bit. Went back into the consequent encroachment of the buy-side imbalance, sell-side inefficiency here, and expansion on the upside, cleaning the premium high, and we have relative equal highs here, and then that buy-side liquidity pool and old volume imbalance there. So that is our premium arrays that still have not been met yet. We're going to drop down to a lower time frame. All right, for the hourly chart, you can see below the discount low of that daily volume imbalance, premium high, discount low. I've darkened the levels up and thickened them up so that we can see by contrast. And then we have that consequent encroachment, the buy-side imbalance, sell-side inefficiency on the daily chart. That's that red line. And then the shaded area is the 1 hour buy-side imbalance, sell-side inefficiency. So don't let me confuse you by having this level here. I'm not trying to identify that buy-side imbalance, sell-side inefficiency that's shaded in green here. That red line is not consequent encroachment of this. It's the daily consequent encroachment on its imbalance. So we traded down below the discount low, consolidated, rallied back above, came back down and tapped the consequent encroachment of the daily buy-side imbalance, sell-side inefficiency, then expanded on the upside. Small little Judas swing today, and rallied higher. Opening here, initial run higher, then taking it out on the initial low. So below the opening price and below an old low, sell stops taken, Judas swing, rallies. Clears the buy-side liquidity pool, and we have that relative equal high still as an upside target for the remainder of the week. Moving on to euro dollar daily chart. You can see how we last week traded back up into this imbalance in here. Now this entire range from low to high, that is your breaker. You don't use this one because look where the close is. The close on this candle's down here. So the lowest close with the big beefy candle. High, low, higher high, trades through the low, comes back up in. So we have essentially a run into consequent encroachment from the low to the high. And I'm showing you the mean threshold of the bearish breaker. So this candle's low to high. Midpoint, there it is, mean threshold. We'll look at that on the lower time frame. Sell-side liquidity pool here, and then the target I've been referring to for over a month now hasn't quite got there, so we might get that as a result of what we're seeing here. Euro-dollar hourly chart, again, the bearish breaker, mean threshold of the bearish breaker, and then we have the sell-side imbalance, buy-side inefficiency here with the low and the high of those candles respectively, and then the imbalance shown in the red levels. Trade up into that, consolidated, came back up into it here, and then drop down. Optimal trade entry here. We'll look at that on the 15-minute time frame. Attacked the sell side liquidity here and has yet to take out the sell side there. Euro dollar 15-minute time frame. Last two close candles. That's your bearish order block. Mean threshold. It's the range low to high. Fib level 50. That's your mean threshold. Hammers it there. I believe it only went 2 pipettes above it. Broke lower. Mean threshold. Here. This is a projection block. bearish order block that digs in about 50% of the original order block. See it trade up in here, and you don't want to ever see this trade through more than 50%. Here you go. Hits it, sells off. Nice little optimal trade entry there, and again above the opening price you can see that dotted line here. It's anchored to the midnight opening candle. Right there, opening price, extend it out in time. Optimal trade entry, sell off. After the run, institutional order flow entry drill, here or here, and then sells off again. Again, remaining sell side liquidity resting below 117 big figure. Moving into British pound versus US dollars, our daily chart. We have made our way down into the bullish order block. I said we could likely trade into that. We have reached that. And we're looking at that 137.25 to 137.35 area. So we've traded there today. And we're going to see if there's any willingness to want to go higher. At this point, if it does go higher, I want to see it stop right here. Okay, that's your bearish order block here. We have left this range on this candle. So if it comes back up, that could be a bearish order block and then sell off and attack the south side liquidity pool resting below this low here and here. So we have relative equal lows there. Lots of liquidity resting below that. Why this? Why this level here? Because we've cleaned the buy side liquidity there and we've broken down. And if this gives way, ideally, I like to see it trade up and fail to even get to that order block. Leave a small little gap there, because what will that be? If it remains a small little gap right there, in other words, assuming it trades up one more day or so and fails to get to that low, what would that create? A breakaway gap. And that would fuel the assumptions on my part that we're going to go through this aggressively and then attack the sell side liquidity pool here. Hourly chart British pound versus US dollar. Okay, we have a mitigation block here. Trades through it there and retrades back up into it there. And then sells off. Heaviness in price, taking us down into deep retracement of that daily bullish order block. Okay, so if it rallies, remember what I said about not going back up to that old low? Look what's here. So it could trade up into this a little bit and not completely fill that in, and that really strengthens the idea of a bearish breakaway gap on the daily chart. Finally, on the pound dollar 15-minute time frame, mitigation block here. And mitigation is this. We have the high, low, lower high, then market breaks below that low. So that's what we're looking for here. For your notes, I got a question about mitigation blocks in this context. Is it when classic retail support resistance theory is in operation? Yes. Okay, but you have to have the logic behind it. Otherwise, just simply looking at old lows being broken doesn't necessarily equate to a ceiling broken turn support or a floor broken turn ceiling. That type of logic doesn't always hold true. But we have a breaker over here that's bearish. We traded up into that and then sold off. So this goes from breaker to mitigation block. Okay. So we break lower below the opening price at midnight. And look at this immediate rebalance. I like that. Low here, displacement, opens here, immediate rebalance goes down. That right there really solidifies the opening price as a line in the sand. It should not go back above it, and it doesn't. Trades lower. We have a small little fair value gap between this low and this high. 1, 2, 3, 4 times it revisits this fair value gap in here. Then displacement. Institutional order flow entry drill there. I don't have it noted. I apologize. I meant to have it there, but it sells off, and we're working towards the lower end of that bullish order block. Now, the order block in this instance should only offer near-term support, and we're expecting it to give way. Does it need to go up there? No. So it just may just fade and go right on through it and offer no support at all. I'm going to give you some lessons on understanding where order block theory should be considered trustworthy. Now, it won't be an all-encompassing treatment of order blocks on Wednesday's teaching, but I will touch on things that make the order blocks more trustworthy. Okay, I have a lot of folks that are asking what makes it an order block trustworthy, or how can you trust an order block? Okay, well, you have to go into a little bit more logic of what makes it an order block, because not every down close candle is bullish and not every up candle is bearish. So until I talk to you tomorrow, be safe.